Alright, hello my fellow investors, 60 Intelligent Investor here, and in today's video we will be talking about how we can actually manipulate the stock with GameStop and AMC. Now before we start the video, please use the link in the description down below to sign up with Acorns. If you guys do that, next week I'm going to be doing a stock giveaway for those who signed up using the link in the description down below. So far we have 11 people, and the winner wins a Procter & Gamble stock. Once we also hit 5,000 subscribers, I'm going to be doing another stock giveaway, which is going to be Apple. So subscribe, like these videos, and stay tuned for that. So, also before we start the video, just know that this is not financial advice. I'm not advising you here in any way. I'm just giving you my thoughts and opinions. So please have that in mind. Alright, so we want to know how the hedge funds have been manipulating the stock. And it's actually worked because they've actually managed to shoot people out of these stocks because, again, they knew a lot of new investors that don't know anything about the market were going to jump into it just to make quick money, and they knew they weren't going to have the patience to wait this out. So, like, let's say, for example, GameStop and AMC, the way it happened was pretty much, the demand and the ask for it. So, let's see, the way it worked, I'm going to show you here real quick. Let's say when this was at $14, the way they brought the stock down was they slowed the demand. So what happened was the hedge funds, let's say hedge fund A and there's hedge fund B, the way they did is that hedge fund A ended up getting a bunch of stocks and they put the price at $5, okay? And then this hedge fund, let's say there was 1 million shares. These are just hypotheticals, by the way. So what this hedge fund did, they ended up buying 1 million shares at $5. So even though the price was at $14, because there was a high demand at $5, the value of the stock dropped. So it doesn't mean that we lost the money. It just means that the demand right now is at $5. So people that panic sold actually helped that demand come down. All right? And that's how they've been manipulating the stock. Every time it goes up, they have enough shares to actually manipulate it. And because people are holding, a lot of people that are not selling their holding, the stock is being able to manipulate. So, this is the way that the hedge funds were getting away with this. People panicked and they sold. So they kept getting those stocks that were available afloat because people that don't know about the stock market and are very impatient, they thought they were just going to jump in, make quick money, and get out. And they followed a hype. They knew nothing about this, so that's why they ended up losing. Now, people that have been holding know how this thing actually works. Most of the people. So again, the demand, because people are not selling and they bought it at this price, this is what the demand was at that time, but they brought it down to this price. Okay? So how can we get around it? Now, let's say the stock price is right now, let's say it's at $5 as well. Now, how can we do that? Now, if everybody, let's say in GameStop or Wall Street bets and stuff with GameStop and AMC, let's say they put the ask price for $100, right? So, people don't understand. They don't understand this is how this thing works. It's all about supply and demand. So let's say everybody from Wall Street bets get together and say, hey, let's put the ask price for AMC at $100. Now, the hedge funds can only trade so much between themselves before they have to cover a lot of the shorts. Now, if they can't cover any more shorts and they need to buy, let's say, 1 million shares, and everybody has it at $100, then they're going to have to buy those 1 million shares at $100 because that's the only asking price there is. So that's how we can manipulate the stock. The way they did it, we can do it as well. They can actually put a big amount of chunk of stocks because they're big hedge funds that have billions of dollars. But us together as a unit, we can all put the asking price at $100, and then when the demand is needed, they will have to buy at $100 because those are going to be the only ones that are available at that price. So let's say it goes up to 100. Now we all jump to the asking price of $500. That's how the stock will shoot up to $500. And this is what the hope is for AMC and GameStop. The higher the ask is, eventually they're going to have to fill those orders at whatever price there are. But if people see a quick jump from $5 to $10 and, they're like, oh, let's sell it off so we can make some money back, then the demand is going to shoot up here. And that's why the stocks move slowly. But if everybody unites and puts the price at a high price when they have to cover, they'll have to pay that high price because those are the only stocks that are available at that price, and they have to buy them. It's the same thing. It's a need. So let's say someone has water and they're trading water within themselves, and they're like, oh, we're getting these gallons of water for $1 each. And then I load up and buy all the water there is for, $1 as well. But I'm going to be asking 100 eventually. So I'm just going to say, okay, it's 100. Everybody's like, you're crazy, you're dumb. Nobody's going to pay $100. But eventually, because they only bought 1 gallon and I ended up loading up, when they run out of water, they're going to need water. And I'm going to be like, well, you have to pay me $100 for a gallon of water. And they're going to be like, you're crazy. And I'm going to be like, well, that's the price I'm selling it. If you want water and you want to survive, then you have to pay this. And they're going to have to buy my gallon of water at $100 when they were paying $1 for it. So this is what it is. It's supply and demand. This is how the market works. People think that because the stock is at $5, oh, it's not going to be able to shoot up, or GameStop, the same thing. Yes, it can. It's all about supply and demand. So if the demand is high at a high price, they're going to have to pay for that high price, and the stock will blow up like it did the first time. This is what a squeeze is. A squeeze is a stock shooting up crazy because the demand is super high. So this is the way we can do it and actually get back at these hedge funds. The way they manipulate the stock for it to come down, this crash, the manipulation here is the same way we can shoot it up. As you see, this squeeze was super high, okay? The volume was at 334 million, so people were buying like crazy. So the way we shot up the stock, we can do it again. We just have to put a higher demand. And if you do options trade, I don't think they'll show it here. Yeah, it's not available right now. But when you check the options trade, it shows you, the ask for 10,000 shares is at 556. So once it's 556, people buy those shares. You have to see what those numbers are. You have to understand more about the stock market and how it works. So if the asking price, if everybody's asking price is at 1,000, then they're going to have to pay that price. But we all have to unite as a unit so we can hit those prices. If people are selling and people, are panic, selling because they want to make a little profit or whatever's going on, then that's what's going to happen. This is the only way we can make the stock shoot up because the demand is at that price. These companies cannot buy shares that are not available. You get me? So, sorry about that. Those are geese in the background. But that's something you have to understand. These happen because this is what the demand is. And if someone's selling their shares at, whatever this price was here at, 53.53, then, someone had to pay that price. They're like, oh, we're selling this amount of shares at this price, and the stock just jumped up because they bought all those shares. So this is a way that we can win. We can push it and we can win, okay? And don't think because the stock price is going to come down or whatever, they can still manipulate the stock down. But as you see, GameStop has been stable between 49 and 50. Because people are holding and they don't have enough shares to bring the stock down. Now they're trying to load up on shares right now. They're trying to buy here, 100 here, 100 there, and they're trying to load up right now. And then once they have a big chunk, they're going to try to manipulate the stock again. But right now, because people are still buying like you and me, they're getting less and less shares and they cannot manipulate it as much. So they know that their time is coming to an end. Eventually they're going to have to cover. But like I said, right now they're still losing a lot of money. So we're winning either way because they're paying a high interest on all those shares they owe. So no matter what, they're still losing money every day. And like that, eventually they're going to have to squeeze. But we don't know when it's going to happen. It can take a long time. We don't know, but it's possibly going to happen. If we put the demand high, they will have to buy those stocks at that price. Just understand that. That's how the stock market works. Supply and demand. That's how everything works. Supply and demand. But, that's pretty much it. That's all I wanted to talk about. If you guys saw this video very informative, then please let me know in the comments down below. Always want to hear what you guys have to say. And thank you for everything. If you guys liked the video, please like, share, and please subscribe. Let's hit 5,000 subscribers by the end of February. And like I said, I'll be giving a free Apple stock. Also, if you sign up with Acorns, like I said, with the link in the description down below, I'll be giving a Procter & Gamble stock. So thank you guys for watching, and I'll see you guys next time. So peace out.